Hello, hello, hello. I'm testing it. Can you hear me? I'm testing it. Hello, hello, hello. You hear us? Okay, they said they can hear us. So we're back, we're live again. So I just want to just recap really quickly for everybody who's joining us. We did do a land acknowledgement. Rashonda introduced herself. Her pronouns are she, her, and magnificent. My pronouns are she and her. I'm going to ask Chris Allanach from our revenue office to introduce himself, and then he'll kick it back to me and we'll get started.
Hello, my name is Chris Allanach, and I am the director of the Legislative Revenue Office. We're an office of there's myself and 5 other economists and an office manager, and we are permanent nonpartisan staff to the House and Senate Revenue Committees. My pronouns are he, him, his.
Thank you, Chris. So just to let everyone know, we are keeping this very conversational. This is going to be a lot of information coming at you in a very short amount of time. And if you're not familiar with it, we make sure that it's digestible and it's something that you feel empowered after this workshop, that you have this information, that you're armed with it. You can go and talk to your friends and your neighbors and your colleagues about it. And it can be a tool for you when you are advocating for policy for your community. So myself and Rashonda will be stopping Chris to ask him questions, and we expect that all of you will be putting questions in your chat, whether you're on Facebook or YouTube or Twitch, questions that you want us to ask. But as we go through this, again, very conversational, we're going to be stopping and really trying to make this as digestible as possible. So back to you, Chris. And I feel really excited about this. I just want to say that. I think this is a great thing to be doing. And I'm so grateful for your partnership in doing this and the time that you've spent, making sure that this PowerPoint is what it is. And for Rashonda and for Portland Center Stage at the Armory for partnering with us tonight. Chris, over to you.
Okay, well, thank you, Rep. Lawrence Spence. So yeah, the conversational will be key. So I might pause at different points just to encourage some questions to chime in, because some of the information builds on itself and it is much easier to just stop and say, wait a minute. And one of those aspects that I'm really going to try and pay attention to is not use lingo. But I do have a tendency, it will creep in at some point, but I know people will throw the lingo flag and stop me for that.
Yeah, but I want to right now and just say, use the lingo, just maybe break it down for us.
Okay, that works too. Okay, so if we could go to the next slide and just kind of jump into it. So I've put together about 25 slides, and they're about 3 sections, and they're not all the same length, but conceptually, these are the 3 sections, if you will, of the presentation. The first one is, what is the structure of the legislature and the process? And that really sets some of the context for where these discussions occur with my office and for representatives like Lawrence Spence office and the Senate and the House, and just some of that terminology that really comes into play, just to provide some context for why I was asked to talk to you and how I fit into the process and some of the players, if you will, in that process. And then the next one is, what is public finance? And it's a very broad topic. So just a couple of slides to introduce you to some of the terminology that we use in describing or analyzing tax policy and its effects. And that's kind of I try not to get too academic there, but that's largely where that body of information comes from. It's public finance economists. And then the third piece really brings it down to Oregon. So what does public finance look like in Oregon? In simplest terms, we're talking about Oregon's checking accounts and savings accounts, and we get to those pieces, and we'll fit those in, and hopefully that'll become clear, lingo and not. But those are the 3 pieces for the presentation. So next slide, please. So this first one is the introductions and legislative structure. So go ahead and go to the next one. Thank you. So this chart shows kind of the structure of starting with the people of Oregon and the voters, And every 2 years, there's an election held, as state the obvious, is going on right now. And the Oregon legislature consists of 2 chambers. We have the House of Representatives, and there are 60 members in the House. And these people get elected for 2-year terms. So every even year, they are up for reelection when they're running. And the Senate, there are 30 members, and the term for the senators is 4 years. So they run every other even year. And so for the elections that are going on right now, for everybody who's voting, you'll have your own representative that you get to vote for, and you may or may not have a senator that you'd be voting for, depending on who's running. It's about half run each every 2 years, so it's kind of an off-cycle thing. And for every Senate district, there are 2 members, is how they relate. So if you picture a Senate district as being a circle, half of that circle is one representative, and half the circle is another representative. And when we get into the legislative sessions, each chamber, the House and the Senate, structures about 15 committees. It varies depending on the session and the issues. There are some regular committees. The revenue committees are some of those that exist every time. Ways and Means is another committee that exists. And so the 2 that I have there on the right here in the gold ovals, I guess, for the House committee, it's the House Committee on Revenue. And that's one that currently Rep. Lauren Spence is serving on. And then in the Senate committee, the name of it is the Finance and Revenue Committee.
So why do they have different names? Do they do different things, or are their functions, vastly different, or what's the logic behind it?
They're not vastly, I wouldn't say they're vastly different, but there have been attempts, and some of the names have changed over the years, that depending on the chair and whether or not the name accurately reflects what that chair wants to focus on. So depending on his or her priorities, revenue is very broad, and sometimes it's been viewed as generic as to what does that mean, or does that mean only taxes, is one way it's interpreted. And so finance and revenue is trying to convey that the committee will look at policies other than just taxes. So bonds and other financing tools for the state. So it's meant to convey a broader topic. One big difference there is that any measure, any bill, any policy that raises revenue has to start in the House. So if the legislature wants to create a new tax, that has to start in House revenue. It cannot start in the Senate Finance and Revenue Committee. So that's one big difference.
Why is that? I mean, that might be common knowledge to some, but could you tell us why?
Oh, it's in the Constitution, and to my understanding, the idea is that the House of Representatives is the chamber that is closer to the people. Each member represents a smaller number of people. As you can just imagine, there are twice as many members, so each member represents a smaller number of people. So then there's more time for that communication and hearing from the people. And so that's the idea, is that raising taxes has always been a very significant issue in the country and the state. And so I guess that's how I would describe why it starts in the House. Okay, next slide, please. So while the prior slide was the body of the elected members, this slide gets at 4 of the offices that we are permanent nonpartisan staff. And these are the offices, these 4 offices work very closely together and with members to produce the legislation, the bills that become laws. So to start here at the top, that top red circle, Legislative Council, these are the lawyers for the legislature. And these are the people, these are the attorneys who draft all of the bills. So if a member, a representative or a senator, has an idea for a new policy, a new bill, they would go to Legislative Council, and Legislative Council would draft that policy, basically taking the everyday language and converting into legalese. So that's something that could become law. And then working through the process, the other offices there, so bouncing to the bottom one, the legislative policy and research. This is the office that staffs most policy committees. In the prior slide, I mentioned there are about 15 committees or so in each chamber. They're organized by subject. So you have the revenue committees, you'll have a committee on energy, a committee on human services, a committee on education, transportation, and so forth. And all of those committees, except for revenue committees and ways and means, which are the spending committees, are staffed through the Legislative Policy and Research Office. So Legislative Council drafts a bill, and then the presiding officers, the Speaker of the House or the Senate President, assign those bills to a policy committee. And then the policy committee works through all angles of that policy. And as the bill makes its way through the process, both the Legislative Revenue Office, the circle on the left there, and the Legislative Fiscal Office are required to weigh in on every piece of legislation to look at two key things. One, on the revenue side, does this policy, does this bill affect tax collections? Does it affect revenue? And it can be fees or any number of things, but usually we're thinking about taxes. Does it raise any revenue or does it reduce any revenue? And then the legislative fiscal side, or the Legislative Fiscal Office, they work with the Ways and Means committees and they focus on the spending side. So for every piece of legislation, what does it cost to implement that policy? Does it mean an executive branch has to hire more people, or what are the costs? And so those are the four offices that work together there. And I'm with the Legislative Revenue Office.
So Chris, you brought up the Ways and Means Committee. Can you just talk a little bit more about what their role is in this? I mean, I know some people understand that bills can die there and things like that. So, but step back a little bit and talk about what their actual job is supposed to be and how that influences policy decisions and what we get to vote on.
Sure. So the Ways and Means is really the spending committee. They're the budget committee. They're the budget writers. So as you're going to see when we get to some other slides, every biennium, or the state operates on a biennial budget. So we have a budget and a certain amount of money that we can spend. And then
really quickly, just define biennium.
Biennium is a 2-year period. And for us right now, we are in what we refer to as the 2019-21 biennium. And that biennium goes from July 1st, 2019 to June 30th, 2021. So it's a 2-year period. And within that 2-year period is when our checking account has to be balanced. But that's the time period on a 2-year cycle that the state focuses on the spending, the money that goes into the checkbook and how it can be spent over those 2 years. And so that budget process, every bill that works its way through the process gets reviewed by not only the revenue folks, but the fiscal folks. And they say, if this were to become law, does it cost the state any money to spend, any money to implement? And if the answer is no, then the legislation can go to the floors and it can become law without going to the Ways and Means Committee. But if a piece of legislation is going to cost the state something to implement, then it has to go to the Ways and Means process. And it's a joint Ways and Means Committee, and there are various subcommittees for the various areas. You have administration, you'll have housing, education, similar to the committees that I mentioned before. But within those, that's where the budgets get built. And so over the 6-month regular session, which goes from January of every even year to June of every even year, is the work that is done on the budget to make sure that the money that's coming in, that we're not spending more than what's coming in. It's the total state budget. And there are some other slides, so if I muddied that up too much, we'll hopefully get a little clearer down the road. Okay, next slide, please. So this slide drills down a little bit more on the Legislative Revenue Office, and this The intent here is just to understand why I'm the person speaking to you this evening. So this is my office. I'm the director of this office. And we don't focus on the spending side. We focus on the revenue side, where the money comes from. How is the money raised? And so we are staffed to both of the House Revenue Committee and the Senate Finance and Revenue Committee. And in recent years, there has been a joint committee on tax credits that has met, that is for the most part just the House and Senate Revenue Committees combined. And there's a process where the legislature has undertaken for several sessions now where we review tax incentives, tax credits, to see if they're meeting their purpose. There's a whole review process that kind of mirrors the budget making process, but just for tax credits. And so what we do is we analyze tax policy and the general structure of local public finance systems. So how do other states conduct how do they pay for the public goods and services? So we provide that information to the revenue committees. I mentioned that we review every bill for a revenue impact. Every bill that's working its way through the process, we have to review to see if it affects revenue in any way. The vast majority of bills do not affect revenue, but we still have to analyze them to come to that conclusion. And then what we provide on that analysis is a revenue impact statement. Every bill working its way through the process has this additional paperwork that goes along with it. And one of those pieces of paperwork is what we call a revenue impact statement, which my office produces, and it describes the policy, describes and provides an estimate for the revenue impact, a tax increase or tax decrease, and then additional descriptive information on that proposed law change. And then we provide advice and support regarding any other public policy, public finance changes that legislators might like to make. Now, primarily it's the revenue committees, but we do work for all 90 members.
So does the public have access to those statements?
The public does right now, and we have what seems to be a fairly usable system. It's called OLIS, OLIS, and Oregon Legislative Information System. This is one where I've gotten so used to the acronym, I'm not sure that I have those words exactly right, but okay. On the OregonLegislature.gov, if somebody wants to go to that webpage, I think toward the right, there's OLIS, OLIS, and that is a system that is organized by legislative session. So if you know what a bill that you're looking for, you can find the bill. You can search by keywords. So you can find a bill, and then you can find all kinds of information about it. You can find out where the meetings were held. You can drill down to any particular meeting and access any information that had been provided to the committee about that bill. And then part of that will be these revenue impact statements. It isn't always, as a bill is working its way through, not all of that information, the statement they don't necessarily pop up immediately. So there can be some challenges while we're working through the system, while a bill is active. But generally going to a meeting, you can look up a bill number. If you wanted to look up House Bill 2233, you can do that and then access the information that gets published to OLIS. It automatically gets pushed out to OLIS. Okay. So the next slide is a header slide. So what is public finance? And here I just have a couple of slides that hopefully won't feel like a vocabulary test, but it's just some of the key terminology that we use. So bear with me while I introduce you to some of the key terms. So next slide, please. So as I was putting this together, I was trying to come up with a definition of public finance. And so I went to a variety of schools, and a lot of the definitions got kind of convoluted. They weren't wrong. They were long and needed a lot of defining for terms in the definition. So for better or worse, and I have some colleagues who'll give me a hard time about this, I grabbed a definition from Wikipedia.
Oh, Wikipedia.
Yeah, and because it's not wrong. So public finance is the study of the role of government in the economy. That's a fair description, if a very high level, but that's largely what it is. So some of the key terms and concepts, and what I'm trying to provide here is some context for what we talk about. That's one of the biggest challenges for new members coming in or other stakeholders who aren't familiar with the ideas is the lingo, and it's a context issue. Oftentimes the issues aren't that complicated, but it's context. So here I've provided three categories. We have revenue on one side, spending on the other, and in between is the budget. And the budget should be that the spending equals revenue, or spending is a little bit less than the revenue, because we can't spend more. The state can't go into the red. So for revenue, we have three broad categories. We have taxes, fees, and bonds. Taxes are compulsory payments, money that we are required to pay, with the most prominent in Oregon being the personal income tax. So for every person who has a job and gets their paycheck on a weekly or monthly basis, you'll see some of the money that is withheld, and that goes, some of it goes, there's an amount that goes to the feds, but amount that comes to the state, that's the personal income tax. And one of the key notions of a tax is when the person who pays the tax isn't tied directly to the benefits of that tax. There's not a direct link. Whereas fees, on the other hand, there is a much more direct link. So a fee, the most common example there would be, or an easy example there, are the state parks. So if you go to a state park, you have to pay a $5 fee or so forth to get into the park, and you benefit directly. You're required to pay that if you want to use it, but then you get to benefit from using the park. And that's, in the cleanest sense, the difference between a tax and a fee. There are cases where it's not always clear if a given piece of legislation that raises revenue is a tax or a fee, but that might be for a second class. And then the third category are bonds. And bonds are debt. It's an IOU that the state would write. And this is a very, it's a legal structure. It gets into, it can be fairly complicated from a financial markets perspective. But what it basically is if the state wants to raise $1 million, and usually the numbers are much larger than that, they will issue bonds. And if I want to buy one of those bonds, I could buy a $100 bond and I would pay $95 for it. So now the state has my money and they'll pay me $100. I give them $95 today, and then they will give me $100 5 years from now. And bonds, in that sense, it's money that is a debt for the state because they now owe me that money. And for the most part, bonds are used to pay for large infrastructure projects, things that will be of value for 10, 20, 30, 40, 50 years.
A good example of that is going to be like municipal broadband, right? So trying to install broadband in rural communities that don't have a lot of access to internet. And, you know, I can bring in a little bit more than Chris can because he has to be impartial. Everybody knows I'm a Democrat. So just talking about, you know, looking at our crises through COVID, a lot of our students having to go to school from home and realizing that they don't even have access to the internet and access to the programs that help them to connect to school and their teachers. An investment in broadband and rural broadband and municipal broadband would ensure that everybody has access to the internet. So the state would create a bond to be able to create that infrastructure. And it's like you're buying it today to see an impact on your community in the long term.
But I have a follow-up, Akasha. So the state, for this example, would create the bond, but the bond, though, is still a debt that the state turnaround needs to pay whoever is the bond holder.
Exactly.
And the bonds, this is one of the roles of the state's Treasury Department. They have several financial experts. and these bonds will be sold on the market. So it could be literally anybody in the world who wants to buy an Oregon bond.
How would one get access to said bonds?
You can talk to your financial advisor. Yeah, that would probably be the best way to talk to a financial advisor that would then purchase them on your behalf. If you're licensed and so forth, you can have access directly to these markets, but I think usually not. You need a certain amount of education and training and certification to participate in those. So if you have, there are a number of private companies that can manage, for those who have money and have it invested somewhere, would be one of those personal investor, financial advisor people.
I will say though that buying U.S. Treasury bonds are a little bit easier.
Mm-hmm.
So I know that I have an uncle who bought me some Treasury bonds when I was born, right, to pay back. So that's something that you can do a little bit easier without a financial advisor. But for these, because of the way they're packaged, you kind of have to go through an intermediary to be able to access purchasing one of these bonds. Because, you know, the example Chris gave is that it's $100. It's not going to be $100. It's going to be way more than that. So that's why you typically go through that intermediary.
Okay. So if we have the revenue that comes into the state, then that's the basis for building a budget. And the budget here are divided between current services and capital investments. So the example of broadband is a capital investment, and would often be funded by bonds, because the benefit, it's going to be very expensive, or it could, depending on the project, could be very expensive, and the state can't afford to pay for it in a given biennium. That's why the bond route. Current services, one of the good examples here might be teachers. It's basically services that get paid for during the biennium. So that's one common example. So anything that gets used during that, the services that the state provides.
Can you just connect that a little bit more, Chris? You said could be teachers, but you mean their salaries, or, you know, just connect it a little bit?
Yeah, the salaries. So the state gets money, and the state transfers money to school districts, and the school districts get they get some money from property taxes. They get money from a variety of places. They get, the two large pots are property taxes, which is a local revenue source, and they will get money from the state school fund, and the state funds a lot of education. So the money goes to each school district, and the school district has their budget, and then they pay their teachers that route. And so that's how within the state's biennial budget, and we're going to see in a little bit about, currently $9 billion goes from the state to local school districts, and each school district pays its custodial staff, its teachers, and all of those services that are the employees of those governments, of those school districts.
So we have a question in the chat on YouTube from Leslie. She asked if we can give an example of a school district who's looking to have a bond passed. What would that process look like? Does it need to be voted on and passed locally first, and then it moves to Salem? What does that look like?
So for the local government, there's another body of law that focuses on local governments. So if you have a school district and they want to float a bond, they want to sell the bond, they want to raise money to build an addition to a school or something, they would put that to a vote of the people. So it would be on a ballot at some point, and citizens would vote on it. And then if it passed, then they would work. Now, I think they work with the Treasury, although I'm not 100% certain on that in terms of getting it out there. I think they do. But the key thing there is that the school district would put it together in terms of the policy, the amount of money that they want to raise, $5 billion or whatever it is, and it has to be on a vote of the people to pass. And those the most common election is the November election in every other year, but there can be special elections and there can be May elections. So moving to spending, and we've kind of touched on this. It's when the state has its budget and its spending is either on goods, services, or transfers, and we've touched on some of these. Goods would be an example of when the legislature buys computers for its staff, including my office. That is the state spending some money on goods for staff. Services, the teachers are a service, and the transfer. One of the biggest transfers, if not the biggest, well, one of them is the state school fund, the money that comes in to the state for the general fund and then gets transferred to local governments. So as the relationships get a little bit more complicated, the state government will collect some money, but then they'll transfer that to local governments. So what looks like an expenditure on the state side is income to local governments. And we just refer to that as intergovernmental transfers.
You have to define expenditure.
An expenditure, that is anything you're spending money on.
And also, could you kind of go back over what you just said? Like, I understood it, but I feel like maybe that's also where some of the loopholes may happen. Maybe that's not the best word, but yeah.
The loopholes for?
Excuse me. I said that in regards to when you were talking about the money going and coming back. Excuse me, could you just repeat?
Yeah, sure. Yeah, okay. So the spending side, so the state has imposed various taxes and collected that money, and it's now in the state's checking account, and the state is going to spend it. And there are a variety of ways to characterize how that money gets spent. And we're going to see some slides here in a little bit that are broad categories. But one way to think about it is that when that money is spent, the state is either buying a good, a physical product, a computer. And so that's where, probably because I'm sitting in front of my laptop, that's what's coming to mind. It's a state-owned laptop. And so the state buys that laptop. That's a good that the state spent with tax dollars collected from the public. Another way the state spends money is on services. And that can take a variety of shapes, but one of those services, the money would be spent on the teachers that provide, now that's going through the local government, or and those teachers are providing a service to the public. And so that's spending on services. And then the third one is a transfer, and the longer term for this is intergovernmental transfers. And we're going to see that the state gets a lot of money from the feds, and then the state turns around and gives some money to local governments. And the actual accounting can be a little bit tricky or two-way, because the transfers between governments can go back and forth a variety of different ways. But that's more of an accounting piece that I threw that in there because we're going to see a lot of money coming from the feds. And so that's a transfer.
Yeah, excuse me. I did kind of misspeak. That was the transferring back and forth is more so what I was thinking about. And I know that can take really different shapes. So it's like on a basic level, when you spend money and how it transfers between people, I could just see how when it's on a much larger scale, you know.
Yeah. Yep. Okay. The next slide, please. And this one is some of that vocabulary that I was referencing. The economists in the Legislative Revenue Office, the members of the revenue committees always keep us on our toes with really good questions about tax policy, who's affected, just a litany of things. And you have the word chart, bubble chart, something on the right. So a lot of different words that come into play. But the ones on the left are some of the key ones I wanted to focus on that we use we being economists, use into describing public finance and tax revenue and some of the purposes of that revenue. And the first one is adequacy. And the idea here is that the primary purpose of raising revenue is to pay for public goods and services. And so the legislature will get together and deliberate. This is kind of a theoretical academic characterization, and decide what is going to be provided via public means. So take education. And so they decide on whatever the bucket of goods and services, the list of goods and services that the state is going to provide. And then the question is, well, how do we pay for it? And so you look at your taxes. And one of the key pieces there is that you want to make sure that the taxes used to pay for the goods and services is adequate. So can the state get enough money from a given tax to pay for the goods and services that it's spending that money on? So adequacy is one component. And I think one way I think about this is we get questions occasionally, usually it's when I'm talking to high schoolers or so forth, about using lottery money to pay for education or pay for something along those lines. And at a very rough level, our general fund is about $20 billion and lottery brings in about $1 billion. So you really can't use lottery money to pay for the education system. There just isn't enough money there. So that's kind of the adequacy piece. The second one there, equity, that is the term that we use to avoid answering a fairness question. And I do mean that somewhat lightheartedly. We often get questions. If there's one common question that I get is, hey, Chris, is it fair that, fill in the blank? And fairness is an eye of the beholder concept. So the way economists, the language that we've come up with, and not me, I mean, it's been around for a while, is this notion of equity. And the component of equity, or equity has two components, what we call ability to pay and benefits received. So the first one, ability to pay, is the idea where a progressive tax rate structure comes from. The idea is that people who have more money should pay more in tax than people who have less money. So if you have two identical families or people, and one is earning $100,000 and the other is earning $30,000, then there's an argument to be made that the $100,000 family should be paying more in tax. And this notion is reflected in our income tax, where our tax rates are 5, 7, 9, and 9.9. And the more income you have to have higher amounts of income before you start paying those larger tax rates. But that's basically the idea. So when we talk about ability to pay, this is where the higher income folks should pay more than the lower income folks. The benefits received principle is that whoever is benefiting from the public goods and services should be paying for those goods and services. And so it's not opposed to the other two, but there's always a balancing act between the ability to pay equity principle and the benefits received equity principle. And so when you talk to economists, not that I can speak for all economists, but this is generally the language we use around fairness. And when I talk to members or other stakeholders about that issue, this is the discussion we normally have. And that way, that gives us, some economists, a tool to evaluate tax principles along those lines, rather than is it fair or is it not fair?
What do you say our state economists, when they're reviewing policy, what lens do they use more? Like it's not, I'm thinking about it in a scaled perspective, which one has more weight?
I think the weight is one way to think about fairness. Oftentimes, when I'm talking to people who have different ideas of fairness, they're often weighting these two things differently. And that's why it's tricky, and it really comes from a person's own individual stand on a variety of issues. So this is where, so an example, the income tax, we have these, the more income you have, the higher tax rate you'll pay, but only on that higher income. So that's an ability to pay. The property tax, which is always controversial, is not tied to income. And it may or may not satisfy some of the benefits received principle, but if you have two families who are identical in every way and they each own a $100,000 house, but they're identical in every way except for their income, and they each own a $100,000 house and they're right next to each other, then they're going to have the same amount of property tax that they have to pay, with a lot of asterisks there around our property tax system, because that's another issue unto itself. But it's kind of a balancing between those two, and some people will feel the ability to pay is more important than the benefits received, and vice versa. So the next bullet point there is, if you could go back a little bit, I just still had, and I'll look at market distortion. The idea here is that when taxes are imposed, they can raise the cost of things. And in an economy that gets loosely described as a free market economy, we're always cognizant of what taxes will do to the markets for goods and services, and when the state imposes a tax, what is that going to do for the prices in that of the goods or services that are being sold. And then the last one here is administrative efficiency. And the idea here, that's a fancy way of saying, how much does it cost to collect a tax? If the state were to impose a tax, and for every $100 the state collected in tax, it cost, say, $90 to collect that $100, there's not much point in collecting the tax, because you're only going to be able to use $10 for whatever policies. So most bills that I see through agencies are allowed to keep about 1% of an amount. I don't have an exact percentage on this, but the concept is that you don't want to spend a lot on collecting a tax. So that's another piece that we look at for tax changes. So next slide, please.
I just wanted us to give an example of market distortion, just so that we can talk about how it can work in both negative or positive.
Sure.
So one of the things is tobacco, right? We put taxes on tobacco, sometimes to defer younger people from purchasing it, but we also gain the added benefit of having a tax. So it does distort the price of that good, but we, as the people or as a legislature, you weigh that against, what it is you're trying to distort the market for, right? What's the benefit of the market distortion? So market distortion is not necessarily good or bad. It just is, how does it impact that particular good?
Correct. Yeah. And that's a good example where ostensibly the full cost of smoking isn't borne by the market price because of all of the health related costs. So in that case, one could make an argument that you're taking the market price for the pack of cigarettes, you're increasing it, and you're getting it closer to the actual price of the cigarettes. So that's a good point, that market distortion isn't good or bad. Economic development is another area where the state can sometimes create incentives to try and get jobs in certain areas of the state. So for whatever reason, various markets, you have depressed areas of the state where there aren't a lot of jobs, there isn't a lot of development. So the state will come in and try to create incentives to improve the development there. And that gets really complicated too for a lot of reasons. Okay, so then the bulk of the slides here are public finance in Oregon. What does it look like? So the first few slides are going to be on revenue. So if you could bounce forward to the next slide, and this is just a header slide, Oregon revenue. So go to this one. So we have 3 slides here. And getting back to some of the terminology that gets used in the building in the capital. So for 2019-21 biennium, this is the biennium that we're in right now, the all funds that come into the state is just under $97 billion. That's all of the money that comes into the state. And by these 4 main revenue pots, well, it's 3 or 4, and I'll explain that second. But the largest there is other funds, and that's about 43% of this total. And other funds, and this will become clear in the next couple of slides, these are a variety of taxes and revenue sources that usually have dedicated spending associated with them. Federal funds is the next largest at 33%, and this is literally just the feds sending money to the state. Now, within that, if we think back to the Ways and Means discussion, the budget writers discussion, there are a lot of programs at the federal level where if the states spend money on a given program, if we spend $1 on a given program, the feds will match that. They'll give us $2 or something like that. That ratio can vary a great deal, but it's a big incentive for the state to focus money on, and health is a big area where if we spend money on healthcare, we can draw down a lot of federal dollars. So we basically use Oregon tax collections to leverage federal dollars. So that federal money coming in there is about 1/3. And then
I just want to plug really quickly. This is why our census was so important in getting an accurate count on how many Oregonians reside in our state, is because that helps us to gain more federal dollars. The percentage may or may not increase, but the amount of money we are gaining from the federal government could, based on our census.
Okay, and the next bucket there is, and it's actually in 2, the orange and the yellow slices. We have the general fund and lottery. Now the general fund is the pot of money that the legislature has complete control over. The other funds are money that gets collected and they have to go somewhere. They have to be spent a certain way. Federal funds always come with strings attached, but the general fund is the pot of money that the legislature has complete control over. And it's linked with the lottery funds, which for the most part, the legislature has a lot of control over. There are a few parts, some of the lottery money is dedicated to certain areas like parks and economic development. But for this reason, within the building here, general fund and lottery usually get mushed together. So we often refer to the general fund lottery budget, and it's those 2 buckets of money.
I don't want to get too off topic, but I was curious when you said federal funds always come with strings attached. Can you talk about why that is?
Sure. It's Medicaid is probably a good program. It has to do with the policy intent of these funds. And maybe I shouldn't have said strings attached, because maybe that has some negative connotations to it, but I guess it cuts both ways. But the feds basically have programs that say to you, the state, if you spend money in this area, we'll give you extra money. And that money can only be spent on those areas. And now there's a lot of bureaucracy and paperwork that goes along with making sure that we spend it only on those areas that the feds approve. That's largely what I meant by strings attached, is that the feds don't just give us a check and say, okay, we trust you, let us know. We have to follow through on that. And so there's some overhead cost in showing the feds that we spent the money in the proper areas.
I think too, Chris, it goes both ways, right? So the federal government creates policies that their representatives and senates vote on, and so they are enacting their will by having those things that we are allowed to spend the money on, right? And I think we also do that in our state government. We say to cities and counties, et cetera, we're giving you this money to enact this policy, right? So it goes both ways.
Yes, the state school fund might be a good example of that. We give that to the schools and they have to spend it a certain way. They can't decide to do other things with it. So the next two slides, I'm going to drill down a little bit more into the orange slice, the general fund, and the green slice, the other funds. Federal funds are just federal dollars, so there's not much to break down there. And then the lottery is just the lottery. So if we can go to the next slide, please. So here is the general fund. And in this biennium, the current projection is to receive $21.2 billion, so just over $21 billion.
We have another question from coming in.
Sure.
It's asking, Leslie is asking again, how much of the federal funds come with these caveats? Like how much are restricted? Is it 100% of that pot, or is it, you know?
That's a good question. I think it's 100%, but I will have to follow up on that. I don't see where it wouldn't be 100%. I can't think of an exception off the top of my head, but I don't know for certain. So I'll have to do a little bit of research on that to see if there is an exception, and I can get back to the representative. Okay, so the general fund here, $21 billion. And most of that money, 86% of it, comes from the personal income tax. And then, so that's the red piece, the Pac-Man-like slice. And then the orange slice is the corporate income tax. And so taken together, 86%, and I think my screen's obscured a little bit, but I think the corporate from memory is about 6%. So that's 92% of our general fund that comes from the income tax. And we are one of the states, we're often a leader, if that's the right term, in having most of our money come from one source. And the income tax, without rabbit trailing too much, is a pretty, what we consider a volatile source of revenue. And we have some slides that will highlight that in a little bit. But most of our money comes from the income tax. And then we also have a handful of other taxes, I think that's the yellow slice, that go into the general fund. We have an estate tax. Some tobacco taxes go to the general fund. So that's another piece of about, I think, 700 million. And then other revenue that comes into play. And a lot of these are fines and fees, liquor, a portion, some liquor money goes into the general fund. But the key piece here is, I guess the takeaways from this is the general fund is around $20 billion and 92% of it comes from the income tax. So the next slide, please, is other funds. So the first thing I want to say about this is at the top here, you can see other funds. The number I have here is 39.6 billion. On the prior slide, it was about 42 billion. This number, I don't have it updated yet by the breakout. The 42 billion is an updated number, but I don't have that updated version for these slices. So I'm using a number from a few months ago, but it's still around $40 billion. And the biggest chunk here is investment and interest income of around $10 billion. And that number is going to pop up in a few places down the road, but a lot of that is related to the PERS system. So a lot of that money is invested and a lot of that investment income. So that's about 25% of other funds. And then we have employment taxes are about 3%. In the orange slice, retirement contributions. Those are from state employees. The other revenue is 24%. And personally, this is a little bit frustrating for me. When we get into the information that provides it, oftentimes the accounting system just referred to it as other revenue. So I actually don't have any clean breakdowns on what the other revenue is at this point. But this provides some sense of some of these taxes. The yellow slice, those are administrative charges. Employment taxes, these would be things like unemployment insurance taxes. Provider taxes are taxes that are imposed upon certain medical provider insurance companies and hospitals. And those taxes exist, tying this to some of the federal money those provider taxes exist to pull down federal dollars. These are medical provider taxes. And then the purple slice, we have transportation taxes. Think of your gas tax is the most common one here. And then there's a weight mile tax that gets paid by trucks.
I know we're talking about, excuse me.
No.
We're talking about Oregon. But I'm curious, would you say that this is mirroring, or would you imagine this mirrors what other states category-wise, looks like in this pie chart?
I would think so. The big difference might be so of the 50 states, about 43 of them have an income tax. You have a sales tax, and so I don't know if sales taxes would be considered the state's general fund. The key characterization of this money is that it's dedicated to a certain use. It doesn't go into the checking account of the state where they can spend it on whatever the legislature decides. Transportation, gas tax. In Oregon, it's in our constitution, the gas tax has to go to roads. I don't know if other states, I don't think that's uncommon, but I don't know how many other states have that direct link. But that's not unusual. Employment taxes is pretty common as well. For all wage earners, when we pay our unemployment tax, it goes to the employment department and it goes into a trust fund, so that when we hit periods like this year, when a lot of people are collecting unemployment, that's the source of that revenue. The money goes into a trust fund. So it's kind of a different kind of savings account. Now, I didn't really talk about trust funds much in this, but I think this structure is fairly common. So I think I'm going about a long-winded way of saying I think it's fairly representative.
And then, Chris, can you just talk to us a little bit about this interest and investment income? Like, can you break that down? What is that actually? And because we are separating that from retirement contributions. So what's the difference? And could you differentiate that, please?
Sure. The big chunk here is the PERS system. So it's all of the state employees. Retirement contributions are the money from state employee paychecks that get added to the fund every month. Whereas interest and investment income is the pool of money that PERS is sitting on right now is invested in the market. And they have different metrics, and Treasury is involved in that. And the money that is earned on those investments gets reinvested for future payments of the PERS liability. So in a simple sense, the retirement contributions are current employees adding a part of their paycheck to these accounts, the retirement accounts. And the red slice is the interest and earnings and investment income, because it's invested, so it's not literally interest. It'll be dividends and so forth that are earned on those accounts. And those all go into the trust fund that is used to pay for the eventual retirement of state employees. So you're going to, and a lot of the charts coming up, you're going to see categories of administration, and it's all part of this PERS. It's such a large dollar amount that it really kind of pops out on these charts. Okay. So the next series of slides, we can go to the next page, is Oregon spending. So the next few slides are going to kind of mirror. I tried to provide some symmetry, and we're going to have the spending accounts, the checking accounts now, for the money that the state has. So if we can go to the next slide. Oh, so just to provide some overview, we touched on this a little bit, but the state budgeting happens on a 2-year cycle. That's the biennial, the term biennial. And we do have this balanced budget requirement, so that at the end of the biennium, the state has to have a balanced budget. We can't be in the red. We can't overdraw our checking account. We can only spend what's in the checking account. Now, that requirement really only takes place on the last day of the biennium. So that's in a very kind of strict sense on June 30th of every odd year. But the legislature doesn't, the state doesn't want to be out of balance for very long. And that's why every quarter, every 3 months, we get an update on the revenue forecast. And this is, just to state the obvious, this has been a tumultuous year for a lot of reasons, but in May, the revenue forecast was way down, and the state, we found ourselves in the hole, depending on how one looked at it, $600 to $800 million in the hole. Like if nothing had changed and everything played out for the second half of the biennium, we would have hit the biennium and we would have overdrawn our checking account by $600 or $800 million, which is bad. It violates the Constitution. So what the legislature did in one of the special sessions is they balanced the budget. And they did that through a number of mechanisms, but we went back, they cut some spending and they withdrew some money out of a savings account that we're going to touch on to get us back into the black where we had a positive ending balance. And our next revenue forecast, and the September forecast kind of bounced back a good bit. And our next revenue forecast is in November. And this is something that the legislature and the executive branch, the governor's office, follow very closely because we don't want to overspend. And we want to make those adjustments when we can. The later in the biennium, the later we get in the biennium, the much harder it is to balance the budget. And that this last bullet point in here, what comes first, spending versus taxation?
One question that came up, Chris, is
sure.
Has there ever been a time where we hadn't balanced our budget on time, and what are our constitutional consequences for not doing it?
I don't think we know what the consequences are because I don't think we've ever done that. To my knowledge, we've not tested to figure out, well, hey, what are the consequences? It's a question I don't know that we want to know the answer to. We just don't want to get into that position. So I cannot say for certainty because the state's a lot older than I am than when I've looked back. But I don't think we've ever hit that. But because I know within the building we watch it very closely. In my years here, there's a lot of attention paid to that. Like, well, we don't even want to go there. We don't want to think about what the consequences are because that suggests we're thinking about doing that. It's like, no, we're not going to do that. So we've stayed away from that one. But the spending versus taxation, I threw in here and I included in some of these discussions because at one point, I think earlier on, I described from an economist standpoint is that there isn't a correct amount of tax. There isn't a right income tax rate, if you will. And that's where the legislative body decides what money is going to be spent, what are the needs for the public sector. And then you look for the tax structure to meet those requirements, adequacy, efficiency, all those kinds of things to pay for that. And under that model, spending comes first, and then you match the taxes. In reality, it's quite often the opposite, where we have a given tax structure, and then the spending debate is, well, what can we afford within that structure? And then do we change that structure? So it's somewhat a philosophical standpoint, but there are two ways to look at that. Probably, at least, there are probably more.
One more question before we move to the next slide, unless you think that there's a better place to discuss this part, but somebody asked, when the cost of PERS goes up, how is the expense covered?
So that's a good question. The PERS liability, that gets updated maybe on an annual basis, I think. And they look at costs over the next 50 years. And it's an actuarial exercise, and an actuary is somebody who really loves working with numbers, and they have models to predict how long people are going to live and what their incomes are going to be and how much they're going to be drawing on retirement. And it's a fairly robust field. And the source so the PERS, in terms of being balanced, you have the money that's going in to pay for PERS, and then you have the public employees who retire and will be drawing on that PERS. And so when that gets out of whack, and right now, according to these actuarial models, it's underfunded. We don't have enough money in the account to pay for that. And the money that goes in comes from two places. It goes to employee contributions, or it goes to that investment income. What is the account or the accounts that they use going to earn over the long term? And those are really the two mechanisms that need to be looked at. There's not much that the Treasury can do about the return on investment. They have some control. I don't know all of the sideboards. They have some control over where that money is invested. But if it gets invested in something that's really risky, they have a chance of earning a lot. But because it's risky, it could also tank very much. So there's a balance. They have an approach that they use, and there's a board there and advice on how to invest that money. And then the other one that the state does have more control over is how much do employees contribute. And so when it gets out of balance, those are really the two pieces. You can look at changing the amount that employees contribute with an eye to what the market expectations are. And then at the back end, you can look at changes to what those retirement benefits are. This does get a little bit beyond my expertise because there's a lot of law around the ability of the legislature to change those things. And there have been a variety of court cases around them. But the key mechanism, the pieces that are there are those ones that I just described. Okay, so the next slide. Okay, so now this is the spending side. The pie charts that we were looking at before were money coming in to the state. Now this is how, now the state has the money, the state has the $97 billion. How does the state spend it? And so this is all funds, lottery, federal dollars, and other funds. You can see that the biggest chunk of it is human services, and that's about 40%. So of that 90, yep.
My bad. Can I interrupt right quick?
Nope.
These funds, though, are money coming, all of this is generated money coming in some capacity on this chart.
Correct. So if we ignore time, because it comes in over 24 months, but for the sake of a mental exercise, let's say it all came in on day one. So now the state has $97 billion to spend. Okay, well, how do we spend it? And this is part history at this point, and then part projection. Because remember, the biennium that we're in right now started on July 1st, 2019, and it will end on June 30th, 2021. So I get we're what, 12, 15 months into the biennium. So we've spent a chunk of this. And so part of that is history, and we know exactly what we spent in these areas. And then the other part is what we project to spend over the remainder of the biennium. And that's the part where we watch closely in terms of revenue coming in according to projections. Because if revenue tanks again, if revenue doesn't meet those projections, then we have to reduce this. This is the budget plan. This is how we expect it over the course of the biennium. We expect to get $97 billion, and this is how we plan to spend it. So the human services, that is largely OHA, the Oregon Health Authority, and the Department of Human Services. OHA is about 65%, and Department of Human Services is 35%. So that's the big piece. Administration is the next largest, and a lot of that is PERS. So the money comes in via the interest, and then this is the spending side of that money coming in. You know, this will include payments to retirees, for example. Another example, economic development, 12%. This is largely 3 agencies. It's the Employment Department, trying to get away from the acronyms that pop into my head, the Housing and Community Services Department, and Business Oregon Department get categorized as economic development. And these categories get chosen to try and take the various state agencies and lump them into categories that enable dialogue for budget makers and stakeholders to view how much is being spent on different areas. One other thing just to note here, we have K-12 education at $9 billion and other education. And the reason that's split out is that $9 billion, that K-12, that's the money that we talked about earlier that the state sends to local school districts. So if you're interested, if you're not necessarily interested on where the money came from, but you want to know where everything is spent, the terminology there is the all funds budget. And so that's what this slide represents. The next few slides, I go through each of those other different pots. So if there aren't questions, we can bounce to the next slide, please. So this is the general fund and lottery. And this is the pot that the legislature has the greatest control over. And the Ways and Means process, the budget making process, the work that the revenue committees do, for the most part, goes into this body, this checking account, if you will, for how the state spends the money. And the largest piece here is that K-12 money. So of that $9 billion we just saw in all funds, about $8.3 billion comes from the general fund. So that's 35% of the general fund. And then human services is about 27% there. So that's the second largest. And that one is mostly DHS money. One way, if there is a lot of interest for anybody listening or stakeholders to understand on the spending side, a common way to look at that is to look at human services and then focus on that spending. Or within human services, maybe there's interest in the Oregon Health Authority or DHS. And then the key thing there is there are different ways to view it. Here, it's just kind of from the money side, from the fund side. Public safety there, that's largely the Department of Corrections, I believe. So that's the jail system. And so, well, that's the general fund. The key thing there, the debate about where the legislature, a lot of the debate during the regular sessions focuses on the general fund, or general fund and lottery. I've lumped them together here, which is how the discussions occur in the building, in the Capitol. So next slide, please. So these are the federal funds. And so these are the ones with the strings attached, if you will. And the largest chunk here is, again, human services at 73%. And most of this is the Oregon Health Authority and it's Medicaid. It's the Oregon Health Plan. So we spend some money on that, and the legislature has spent, I don't know the details because it's the Ways and Means process, but to my understanding, there has been a lot of work over in recent years to really leverage federal dollars to support the Oregon Health Plan. And that shows up here in 73% of the federal dollars being in the human services category. The second big chunk there, the yellow, the economic community development, is largely the employment department, and those would be unemployment insurance benefits. So for anybody who has, there's a state payment and then there's a federal payment. Like the $600 that happened this year came from the feds, and that spending, if you will, kind of shows up in this yellow slice here. Okay, then the last slide on the spending, the next one, other funds. And the largest here is that administration piece. It's PERS again, and there's a lot of money in that account. And then human, what's the second one? The human services is the next large, and that's the Oregon Health Authority. And the story kind of starts to become the same here, as you can see from each of these. So I won't repeat it another time. But that's the last slide for the spending. We're going to shift gears a little bit with the next section. So this, I'm kind of slow talking to see if there are questions.
Yeah, I kind of have one. Is there anything you would recommend maybe people take more note to with these last couple of slides?
I think the takeaway would be the dollars involved, just to get a comprehensive understanding. I've known some folks, because so much of the dialogue focuses on the general fund, which is in the order of $20 billion. They can be shocked when the actual budget, the all funds budget, is $100 billion, because $100 billion is a lot more than $20 billion. And in terms of advocates, kind of going either direction, depending on what you're advocating, either more or less spending, it's valuable, I think, to think of other funds as a way to perhaps redirect some revenue. There are some other potential changes there. It can be harder because a lot of those funds are directed a certain way. The general fund is the easiest in the sense that the legislature has the most control over that right away.
So more questions coming in from YouTube. The first, so there's going to be two, Chris. So the first is, if we don't spend the full allocation, does it carry forward to the next biennium?
There are a variety of accounts that some of that will carry forward, but there will also be reversions that get, and that's where if at the end of the biennium there's extra money, it goes back into the pot for the budget for the next biennium. And that there's a lot more there than I know, because then that's on the spending side. So I can get you more detail there, but the key things there are any other kind of reserve accounts that agencies might have, and then reversions, which is money that goes back into the general fund. And there's a lot of work done by LFO in that area.
And then the second one is, how is the split between K through 12 and higher education determined?
I think those are legislative debates, and those will happen within the education committees. Most of it probably happens in the House and Senate education committees. You'll have K-12, you'll have higher ed, you'll have early learning. So I guess pre-K and younger. But that's part of the debate that goes on in the legislative process, is the short answer. And if somebody wants to get tapped into those debates, the committees that they want to look to would be those education committees. So you can log on to OregonLegislature.gov, go to OLAS, look up the committee. Part of the information that there is you can find the chair and all of the members who are on those committees. You can also reach out to your own representative or senator.
Did you break down what LFO is?
That's a good question. I don't know. LFO, Legislative Fiscal Office. They were one when I had that. There was an early chart where they had the bubbles or the circles of the different offices. The Legislative Fiscal Office is our older and larger sibling, and they focus on the spending. They are where we, the Legislative Revenue Office, we're staffed to the revenue committees. The Fiscal Office, LFO, is staffed to the Ways and Means Committee, and they focus on the budget. Those are the budget analysts, and those are the ones. That's the office you want to go to, and they have a lot of information on their website as well. If there's somebody who wants a lot of information on how this money gets spent, because there's a lot of detail there.
No more questions.
Okay, so we can go to the next slide. So here we're leading into the reserve accounts, which are kind of the savings accounts for the state. But building into that, again, this is for better or worse, this is the world that I live in on a daily basis with working on revenue issues for the legislature. We have revenue volatility, the kicker, and the reserve accounts. And these are a very high level introduction, delving into a little different perspective of the revenue picture for the state. So the next slide, please. So what we're focusing on here is the general fund. And again, we focus on the general fund because that has the greatest flexibility for the state. And I actually went back and forth on these two charts on which to go first. I landed this way for better or worse. The chart on the left shows the change from biennium to biennium in percentage terms. So we have data here going from the 1991-93 biennium to the current biennium, 2019-21. And the percent change there shows up as anywhere from a positive 25% at the top down to a minus 10%. And so this is how that revenue changes on a biennial basis. So if I can speak a little bit out of turn for budget writers, if we focus on that orange line, that is a flat line just above 10%, it's about 11%. That is the average change over this time period. And if I were a budget writer, I would choose to know that every budget is going to grow by 11%. We have that provides a certain amount of certainty, and we know whatever we're spending this biennium, it's going to grow by 11% next biennium. And that takes away a lot of the uncertainty that exists in the real world. And again, that's the average of the change. That red line that is like an EKG line is the actual change from biennium to biennium. So you can see that it has grown by more than 20% a couple of times from going from one biennium to the next. And it has fallen by more than 5%. In other words, an actual decline of more than 5% a couple of times. Oh, and I should point out that that black dashed line is the zero line. So everything above that is still a growth. It's just whether or not it grows by 20% or 10% or 5%. It's not a decline. And that can be a point of confusion because we can have declining growth rates, but we're still growing. We're just not growing as fast. So what you see here, just starting in 91, 93, that biennium, the revenue grew by about 18 or 19%, and then it grew by 20%, and then it grew by 18%, and then it only grew by 7%. And so that up and down line is what provides some uncertainty for the budget makers. So if we go all the way to the right there, for 1921, we have two lines. The red line is the actual decline, and it was an actual decline going from 1719 to 1921, at least at the time this was made. And that's partly driven by the kicker, and we'll get to that. The kicker is a refund to taxpayers for money that is collected that is above projections. And so that is a policy that other states, to my knowledge, don't have, and it adds to some of the volatility here. And if you ignore the kicker, like if the kicker didn't go back to taxpayers, then the general fund would have increased by 5%. But because it went back to taxpayers, the general fund declined by a couple of percentage points. So that one, this one helps understand the volatility, but it is somewhat challenging to think about these percentage changes. So I started with the hard one first. The one on the right is a little easier because it's the actual amount of the general fund. And you can see going from 89-91, the general fund was about $5 billion, to 1921, at the bottom of where that red line goes from a solid line and becomes dashed, we're at about that's that $21 billion that we're at right now. The dashed line is the forecast. And so right now we're actually expected to hit a $30 billion general fund by the time we get to 27-29. And you can see that the actual declines in the general fund where the red line drops. So 2001-3, 07-09, and then 1921. So the blue dots there are something that I've added to convey the kicker. So as the economy is improving, tax collections are going up. We hit this kicker, and every one of those blue dots indicates a biennium where the kicker was triggered. So then the question is, well, what is the kicker? So in simplest terms, It is, so if we think back to the budget making process for a given biennium, so we look at the biennium we have right now, 1921. If we go back to May of 2019, we're in the long session. The state economist comes in and says, my estimate for 1921 is $21 billion. And that happens, and that's the amount that the state, that the Ways and Means can budget to. They can't spend more than that. They can only spend up to that estimate, plus any legislative changes, but kind of setting that aside for right now. If actual money that comes in over the course of the biennium exceed that estimate, that's the kicker, and that money goes back to taxpayers. So if we could bounce to the next slide, we have a couple bullet points on that. I'm seeing if there are any questions as we're getting into this, because the kicker can be a little bit tricky to get our minds around if it's new. Okay, so but basically,
there is a question.
Okay.
How is the forecast taken into consideration when establishing the budget and policy?
Okay, so the forecast is made independently of the budgeting within the legislature. There is a state economist office, the Office of Economic Analysis, and they're in the executive branch. And the state economist is the primary, they do a number of things, but their primary function is to produce this general fund forecast. And they release a forecast every quarter. They update it 4 times a year. And it's not exactly on these dates, but it's more or less March 1st, June 1st, September 1st, and December 1st. For a number of reasons, it's a little bit different, but those are the updates. How it relates to the budgeting is that the May forecast in the odd year is the basis for the budget. So what's magical about that May in the odd year is, remember, the legislature meets every odd year in the long session from January to June. So going into each legislative session, the legislature starts with the governor's budget. They start with the governor's budget. And policy decisions are hashed out in January and February and March. And there's actually a forecast release in March. And that forecast release will be for the current biennium and the upcoming biennium. And throughout March and April, these policy decisions will be debated within the legislature. And then come the May forecast, the state economist comes in and says the projection for next biennium is $22 billion. And that's an independent analysis of the budget needs. It is an unbiased estimate of what our tax structure is going to bring in the next biennium, what our income tax is going to be, what our income tax collection is going to be in the next biennium. And they have a variety of models and ways that they do that, but they come in and they say, okay, it's $22 billion. The legislature says, oh, okay, great, that's what we get the budget to. They can't spend more than that. The exception to that is the legislature can change the law. So the legislature can always increase a tax and so forth. They can increase a tax, they can decrease a tax. So they can change taxes. And that would be an add-on to that revenue forecast. Hopefully I didn't get twisted around there.
Thank you, Chris. They'll tell us if you did.
Okay.
We have another question from Gregory on YouTube. He asked, what would you estimate the slope of the general fund trend to be in the right-hand graph if adjusted for inflation? So can we go back a slide, Jonas?
Yeah, so inflation in recent years and even in the forecast is still pretty low. So it would be flatter. I mean, I could develop a number for you, but it would be flatter, just a little bit flatter, because inflation right now, we're in a pretty low inflation environment.
Okay, that's all for now. Thanks, Chris.
Okay, so the kicker, I'm not sure I touched on all, I think I touched on this, but so it's based on the general fund. And so the state economist comes in and he makes that forecast for the upcoming biennium. And let's say it was $22 billion. And then throughout the biennium, we're tracking the money that actually comes in. And so when we get to the end of a biennium, and this happens for every biennium, when we get to the end of the biennium, if actual collections were at least 2% above his or her estimate, then the full amount that is above that estimate gets returned to taxpayers via the kicker. Next slide, please. Okay, so we've had this law since about 1980. It was put in statute in 1979. In 2001, it was put into the Constitution. And for a period there from the mid 90s to about 2010, it was a check that people actually got in the mail around November, December. But it started off as an income tax credit, and it returned to an income tax credit, I think in the 2011 session. And so the kicker that we get nowadays is a credit, and it shows up on our income tax returns. And it simply is a percentage of your tax liability for a prior year. So when you fill out your taxes every other year, if there's a kicker, that's how you get your refund. It's either a reduction in the tax that you owe or an increase in the amount of money you get back from the state. So the kicker has been triggered 12 times out of the 20 biennia since about 1980, which kind of reflects it's largely an unbiased estimate. You know, an unbiased estimate for the state economist means half the time they're going to be high and half the time they're going to be low. So, but since the inception of the kicker, just over $5 billion has been returned to taxpayers, and that averages about 2.5% of the general fund. And the current kicker is just under $1.7 billion, and taxpayers got that back on their 2019 tax return that we filed this year.
So, question: what's the average credit that what's the average and the median that Oregonian would get back on their taxes? So because it's varies based on how much taxes you pay in the first place. So do you have those numbers?
I don't have. I can get them to you, and they change every biennium. So for example, the one I have here at the bottom bullet point there, it is about 7.7% of 1719 general fund, and the actual kicker percentage is around 18% this time. So the kicker percentage, so for a person getting their kicker in 2019, it's about 18% of the tax that they owed in tax year 2018. There are a lot of technical aspects to how it gets calculated, but that kicker percentage has been as high as 18% and as low as I think 7 or 8%. It varies every year. Now, the thing about the kicker is that every taxpayer has that same percentage, because the $1.7 billion for the current kicker, that was the amount of extra money that came in. And so that goes back to taxpayers. And so what the state does is they take that $1.7 billion, divide it by the taxes from 2018, and they get a percentage. And that percentage was about 18%. So when people file their 19 return, they pull out their 2018 return, say, oh, I had $1,000 in tax, I get an 18% credit. So one of the policy debates that usually enters here on the kicker is how it goes back to taxpayers. And most of the kicker goes back to the high income filers, but that's because the high income filers pay the vast majority of the tax. So, but the exact mean and median, the mean is going to be a lot higher than the median, because the concentration for filers, most of the income is at the top end. And so you will have some people who in a normal year will pay a large amount of tax, so they'll get a very large kicker, but then a lot of people who get smaller kickers. Okay. So the next slide, I think, is the last one. And this is the state savings accounts. These are reserve accounts. I will still get questions or I will read somebody who is critical of the state and how the state needs to have some sort of reserve fund or rainy day fund. And in fact, we have two. We have an education stability fund, which was established in, I think, 2002, and a rainy day fund, which was established in 2007. And so these are, I kind of call these our savings accounts. They're the reserve accounts that there are a lot of mechanisms for pulling money out of here. But the key thing is this is money that gets set aside for a rainy day or a recession or a downfall. And it helps mitigate the need for budget cuts when the state is in a recession. So the Education Stability Fund gets regular money from the lottery, and the Rainy Day Fund gets some money from every biennium from the corporate income tax. And also at the end of every biennium, the ending balance, the amount of money that is left in the checking account, if you will, goes into the Rainy Day Fund up to 1% of the budget. And that's usually around a couple $100 million. The use of the funds are a little bit different. The Education Stability Fund has to be used for public education. The Rainy Day Fund can be used for whatever. And I didn't include in here, there are a lot of details about how the money can be accessed, but one of the key themes for accessing the funds is that it requires a 3/5 vote of each chamber to access these funds. At the beginning of this biennium, we had about $620 million in the ESF, the Education Stability Fund, and $667 million in the Rainy Day Fund. So at the beginning of the biennium, we had just under $1.3 billion in reserve accounts. And this is a pretty new situation for Oregon. Back in the last recession in 07-09, we had just started these reserve accounts and didn't have much in there, and they got depleted pretty quickly. But at the beginning of this biennium, we had about $1.3 billion. And throughout the course of this biennium, we're expecting about 223 to be deposited into the Stability Fund and 223 million. I don't know if I said billion, 223 million, and 286 million to be deposited into the Rainy Day Fund. So about $500 million is being set aside this biennium. Because of the pandemic situation and the shortfall that we had with the May forecast, where we were in the red by that $600 to $800 million, $400 million was actually pulled out of the Education Stability Fund. That was one way the legislature got back to a balanced budget. So we see that withdrawal there. The 419, it was actually 400 that was taken out to balance the budget. The other $19 million is a regular transfer from here that goes to a state scholarship fund, opportunity grant fund program. And the way the Stability Fund was set up is that interest earned by the account goes to that scholarship fund. That's the $19 million there. But right now we're on track to have, give or take, 400 million in the ESF and just under $1 billion in the Rainy Day Fund. So by the end of this biennium, we'll have about $1.4 billion in reserve accounts. That's if the revenue collections for the rest of the biennium come in like we expect them to be. And so when the legislature comes in next session, I'm sure there'll be some discussions about use of these funds and crafting the budget for the 21-23 biennium.
So a question that came in is when the legislature voted to withdraw this $400 million, did it go to education, or was it just a part of the general fund? And how did that get spent, or how are we planning on spending that money? It
went to education. That's how kind of sprinkled throughout here, there's this $9 billion of state money that was that K-12 education, then the $9 billion, we've talked about it in a couple of different ways that went from the state to the school districts. When we had that shortfall, it was a shortfall that kind of affected everything in the general fund. And so one of the ways they kept that 9 billion there was to take 400 million from here. So it did go to education. It hasn't been necessarily spent yet because it's in the accounts right now to be spent throughout the rest of the biennium. And then I think the next slide is just an end slide that has some contact information for my office. So if you ever have any questions for us, me or any of the other economists in the office, you can reach out. There's our website. We have some reports, some information out there, as well as contact information for all of the staff in the Legislative Revenue Office. And so we're happy to take any questions and be put on the spot for trying to provide useful information.
Well, thank you so much, Chris. I want to say thank you for doing this and making this digestible. I want to give Rashonda a moment to say, I think we're ending right on schedule. It's 7:55. This was programmed to 8 p.m., so this was perfect. But Rashonda, do you want to say anything about what you learned or what you want to bring back to the community or what you want to see us do next, you know?
Yeah, I mean, same as you were saying. Thank you so much, Chris. This was very informative. I mean, I definitely still have questions, but I'm, trying to formulate them. I look forward to just kind of maybe doing this again exactly because I know everyone was not available, and then also just maybe just more of a breakdown of different departments and such. But just being able to engage in this conversation was really good because this is a whole new learning, of funding and statewide at that. So yeah, it was very informative and I appreciate it.
Yeah. Thank you, Shonda. Thank you so much again to Chris for doing this work. He started at so much information, and to really bring it down and make it digestible and plot the course for us was just excellent. And so I'm just very grateful for you and for you taking the time to be here. I know it's a part of your job, but you still did it really well. I also want to thank Portland Center Stage for doing this, for pushing this out on all of your streaming platforms, for having it on YouTube, on Twitch, on Facebook Live, and giving, the general populace so many different avenues to connect with this workshop and to learn about public finance in Oregon. I also want to thank our ASL interpreters, Jake Sparks and Ben Cavaletto, as well as our closed captioner, Elizabeth Archer. You guys made this event even more accessible, and I want to continue to set the standard that anytime we have these workshops or anytime we have town halls or anything where we're giving the public information, that this information should be accessible to all Oregonians regardless of their ability. And so being able to provide ASL interpretation and to provide closed captioning is so fundamental to the work that we do. Again, I want to thank Rashonda and Jonas. I want to thank Y.G.B and all of you guys for tuning in and for broadcasting this on your social media and making sure that not only just tonight that people tuned in, but this is going to be a video that we can share with our community. People can learn from it, and we can also bring together a collection of questions and invite Chris back for something even more informal. And again, thank you all so much, and have a good night. See everybody later. Yeah. Oh yeah. Jonas, can you let us know when you stop streaming?